Joining us now to talk about these banking worries is finance professor Ing-Haw Cheng from the University of Toronto. Professor, what will it take for Credit Suisse to collapse like SVB or Signature Bank did?
Well, let's take a step back and think about what got us into this situation. So over the weekend, we had the failure of two mid-sized regional banks in the United States, largely due to a combination of a bank run and some risk that went wrong for those two banks. Today, we are seeing a large degree of panic in the markets regarding Credit Suisse, more or less because one of its large investors discussed how they would not be willing to invest more money in Credit Suisse, which is attempting a turnaround as we speak. I think right now markets are extremely jittery and are viewing this particular event as a portent of potentially more turmoil to come, more or less because they got spooked over the weekend by the events at SVB. So if investors continue to get spooked, I think that could spell a lot of trouble for Credit Suisse going forward. I think Credit Suisse, the consensus seems to be that right now it could potentially withstand some turmoil, but certainly, things might get worse.
And you briefly touched on this, but is this panic contagious, and do you think it will impact other banks around the world?
Well, what's very interesting about the current situation is that it has spread, I think, as far as it has. From a panic at, again, mid-sized regional banks in the United States to a panic at Credit Suisse. Fundamentally, I'm not sure that I don't have all the information yet, but it doesn't seem like Credit Suisse necessarily is in trouble for the same reasons that SVB is in trouble, other than markets right now are extremely skittish. I think the fact that global markets are all very connected means that there is some potential for stock markets, for example, to be affected across the world. Right now, even here in Canada, you see today markets are down significantly. So they're connected insofar as global markets are connected, but we'll see to what extent these things actually spread. The fact that my general view is I think the SVB and the Silicon Valley Bank of panic and the Credit Suisse panic right now are more or less just connected through market skittishness as opposed to exposure to some of the similar risks.
How similar is what we're seeing now to what happened in 2008?
So this question comes up a lot, and I think the narrative of 2008 is one where we had banks at the heart of the global financial system exposed to risks that investors were more or less not very aware of, or either that or didn't understand. Those risks went south very quickly. So in 2008, a lot of banks had made mortgage loans in the subprime lending market and obtained exposure to those loans through complex financial instruments. And all of a sudden, the risk realized and went south on those instruments, causing the collapse of Lehman Brothers. What you had here this past weekend at Silicon Valley Bank was a much more, what I would call, less exotic or plain vanilla risk, which is interest rate risk that we teach in MBA classes across the world. That particular risk went south for Silicon Valley Bank and resulted in a bank run and its collapse. I'm a little bit more sanguine that this is less like the 2008-2009 financial crisis than more like the more like the financial crisis. But nevertheless, we'll see. The future is very uncertain.
Thanks for joining us, Professor.
Great. Thanks.